Hi, Chris Hood here with this week's tips, and I think it's probably appropriate we have a little chat about interest rates and where they're headed. Last week we saw the Commonwealth Bank put their rates up, and I have no doubt that the other banks will do the same. So what do you do if you're going to go and buy a home? What do you do about interest rates? Well, the key to this really is to factor in about another 1% rise in the interest rates. Generally over a period of time your rates will go up, they will come down. And at times they'll remain steady for some period of time. So I reckon a really good piece of advice, and something I was taught years ago when I first got into real estate, was always try and factor in about a 1% increase on your interest rates. So if you're getting a rate of 6.5 or 7%, factor in an extra 1% on top of that and work out what the repayments will be on that amount of money. And then you need to decide, okay, can I afford to do that? It's okay when the interest rates come down, of course you can afford it, but when they go up, that's when you need to say, okay, let's have a look at the budget. Can we afford to pay this extra money? If you can't, it simply means you're borrowing too much. So then you might have to compromise on the type of home you buy. But whatever you do, make sure you buy something. Don't just say, oh, it's all too hard and interest rates are too high, I'm not going to buy yet, because I can absolutely guarantee you it'll change and change very quickly, and the market will slip you by and homes will get dearer. So do that, factor in that extra bit of money, see if you can afford it. If you can afford it, then go and buy the property that you're looking at. If you can't, backtrack, compromise a little bit on the type of property, but whatever you do, make sure you get into the market. If you need any advice or anything like that, or help in any of these sorts of issues, don't forget to give us a call on 6043 7777. Speak to you next week.